know what I'm saying? But great questions, man. Great questions.
Now, I'm gonna ask you one more, and I hate to clog up the airspace like this. But let me just ask you one more. So let's imagine. So you keep saying that if the interest rates go up, that's a good thing. I'm kind of looking at it from my perspective. Like, I hear interest rates going up, I think of it as a bad thing, right? But clearly you're saying it's a good thing, and I'm guessing that's because if the interest rates go up, that means more money is coming out of the economy, which then pushes the value of the dollar up. Am I tracking what you're saying, right?
Yep, that's right.
Okay. And now either way, if the interest rates go up, so I could potentially make money on the Forex with a USD pair. But even if in the stock market, if I go to the stock market and let's say the value of stocks are falling because people are being scared, then I would run some puts in the stock market, and I could be making money on both sides of that too.
Absolutely. Absolutely. Listen,
my man. Okay.
When interest rates go up, so it's a different world. This is why you got to know your asset. Like what asset are you trading or investing? Because what happens in the world or in the economy has a different effect on different assets, right? So interest rates going up for the dollar is good for Forex, for the dollar in the Forex asset world, but it's bad for the stock asset world. You understand what I'm saying? Because what happens is interest rates go up. So now the banks and companies, so just say you had a company, right? You sell donuts or whatever, right? You got a company, and now you want to make some improvements to your company. You want to get a better machine. You want to redecorate the place. Maybe you want to open up another branch, whatever the case may be, right? There's something that you want to improve on, but you don't have the money for it. So you got to go to the bank to get a loan. Well, guess what? The interest rates are high on loans. So you got to pay this loan back, right? So if you owe me money and I say, hey, you owe me $100, but because I'm giving this money to you when you want it, when you need it, I need you to give me back $110. You'll say, okay, that's cool. That's your little interest. You put a little interest on it. That's cool, right? But then what if I say, hey, I'm giving you $100 right now, and because you need this money right now to go and do whatever it is that you need to do, you got to give me back $300. You're gonna be like, man, what? What you robbing me, bro? Like, what's the problem? What's going on here, right? You know what I'm saying? You're gonna feel some type of way about that. Basically, what's going on is because the interest rates are higher, it's more money that these companies have to pay back if they take out loans to improve their company. So guess what's gonna happen? They're not gonna take out that loan. If I told you got to give me 2 times what I gave you, you only needed $100, but now you got to give me back $300. You're gonna be like, man, forget that. I'm good. I want the loan. I'm straight. I'm gonna keep these old machines. I'm not gonna worry about opening up another branch. So I'm not gonna remodel. I'm gonna just keep everything the same way. Well, guess what? You're not making. You didn't allow yourself a chance to make any extra money. Your company won't make any extra money because the place looks shitty, right? You didn't redecorate, right? The machines are all breaking down, so your sales ain't gonna work the same because you can't produce the same. Well, guess what? You don't have another branch. Well, everybody was going to your one location, but everybody was telling you, hey, man, if you had another location over here, that's why to be booming. Well, you can't open up that location, so all your money slows down. So it's slowing down because you won't go and take a loan out from the banks because you got to pay more back than what you actually borrow. That's what's going to happen to every company in the stock market. They're going to be, all these small cap companies, these companies that are doing good, right? They could be the next Facebook, the next, Microsoft or whatever. But in order for them to do that, they're taking money from the banks. They're taking out loans to improve their business, to be more, be able to produce more and do more, right? To make more money so that they can grow to that size. But guess what? Interest rates are so high, they're not even going to consider taking out those loans. So not only are they not going to be able to take out the loans, but now they can't make the improvements that they want to make. So the price of their stock will fall. You understand what I'm saying? And this is what, this is what knowing what is happening in the economy and how it affects a particular asset makes you get to the money, man. You get to the money, you automatically start coming up and thinking about everything of how you can make this work in your favor, which is what they do. You know what I'm saying? That's all they do. They sit back, they peep the news, they be reading their newspaper, they check in, they turn CNN on the news, whatever they got to do. They get the headlines, and then they go and they think of how can I position myself to take advantage of all this.
Hey, Bain, you connecting the dots, bro. I appreciate this.
Absolutely, man. Absolutely. This is the name of the game. I'm telling y'all, rock with me. Y'all will be cashing in every week, man. Every week. I'm trying to retire. I really, really am trying to retire, man. I put this work in, and I see where it can take me, and I'm not playing around. You know what I'm saying? Like, I'm trying to go, and I don't care how long it takes. You know what I'm saying? I got the skill set that nobody can really take away from me. You know what I'm saying? So as long as I'm able to, I'm going to use it, and it's going to work out in my favor for sure. You feel me? So
yeah,
that's that.